Hello and welcome to KYC. I am Sharad Dubey and with me is Varsha Chandani. Of course, a very unique company coming today at our KYC show. The name is Sequent Scientific, and of course we teased to our public also in social media, and we had put in pictures of animals as well. Very interesting. Generally we speak about pharma companies. It's generally on humans, but this is on animals as well, and they are favorite of mine as well.
And that segment is growing really fast.
Exactly, and that pet segment you call it, that's also growing up. But the question remains is, why are we calling them? Is it just the pets or is it humans also? First question is, what will be the outlook for the India business? Of course, that's the geographic front. But if you kind of break it down in the product segment, there are two segments coming in. One is API, other is the formulation business. And of course, formulation comes later stages on a higher margin side. That's what we had discussed. API also is something which we would be focusing on. CDMO opportunities, what are they looking like? What's the market looking? What's the potential here? Viyash Lifesciences, you must be hearing about this company. And that itself is an arm of Sequent Scientific. What's their growth segment looking like? And of course, the revenue margin guidance for FY27. But there's a lot of complications whenever we discuss a pharma company, and that's why Varsha is there to actually help us break the company out, what actually it does. And it must have been in an industry pressure when change of hands was there.
Exactly. Just talking about what this company do. So first I'll talk about Sequent, and then I'll talk about Viyash because of the merger. NCLT has recently approved their merger. About Sequent Scientific, they provide a wide range portfolio of products, of animal health products, and has two business segments. You have formulation and you have API. Formulation contributes almost 79% to the overall business, while rest, that is 21%, has been contributed by API. Also talking about the geographical analysis. So Europe constitute almost 45 to 46% of the overall revenue. Emerging markets contributes almost 44%, and rest, that is 10 to 11%, is being contributed by India business. Now the important headline, I would say, is the Sequent Scientific and Viyash Lifesciences merger. Now first let us talk about what Viyash Lifesciences do. So they develop API, which is a main salt, advanced intermediates, which is used to manufacture API. So if I were to talk about the value chain, you have key starting material, you have intermediates, you have API, and then end product, that is formulation. So they are into API, they are into intermediates, and they are into formulation as well for human. It operates globally with a robust R&D pipeline and manufacturing capabilities across 8 plants. Now, let's give a highlight how merge entity will look like when Sequent and Viyash will merge itself. So revenue will become 2x, EBITDA at 2x, and EBITDA margins on a consolidated level stand at around 14.6%. Now, also, since we just got over with Q2 numbers also, let's talk about how was Q2 FY26 for Sequent, because Viyash currently is not being consolidated because merger is in progress. Now, talking about the Q2 FY26, overall a good set of numbers. Significant growth has come from Europe business because of growth in Spain with good export performance, while India business is beginning to accelerate as field team expansion ramps up. Talking about the API business, so API momentum continues at 7% year-on-year growth. We would want to know what is the outlook when it comes to their API business, and they've also launched product for the US market as well. So overall, Sequent being into animal pharma, Viyash being into normal, rather human pharmaceutical companies. So now when these companies will combine, we'll see a lot of new things emerging up, maybe CDMO opportunities, and the pet segment. So because if you see a lot of companies, Sharad, are going into pet segment now.
It's an inflection point, right?
Yes.
So many things happening.
So many things happening, and Sequent had some kind of, I would say, pressure in the last few quarters, which we will of course talk about. So there was an overhang. Now we may see again, we may see good numbers going ahead. We have to gauge this company for next few quarters as well.
Sure.
To see whether they'll come up with the good numbers as well.
So yes, there is a bit of confusion here. Where does the company stand? Just to remove those confusions, we are getting this KY issue. And importantly, let me just point out all the rating parameters so that it becomes easier for you when you watch the show on how we are judging this company, which is of course, as Varsha mentioned, at an inflection point. Income statement, balance sheet, cash flow, return ratios, the numbers, that's something which we crack for you. Then there is shareholding street cred, which is nothing but the shareholding return, be it on a 1-year basis or even a 5-year basis, and also the valuation, where does the company stand, and most importantly, the outlook. Based on these 8 parameters, we give the KYC rating. But the first parameter, you start with the income statement, and of course I think the Q2 numbers also will be included in that.
Yeah, absolutely. So, talking about the income statement, let's see what has happened from FY22 to FY25. If you see, the numbers have not been really good. Because there were some problems that Sequent was going through. So one is of course geopolitical and energy cost spikes because of the conflict between Russia and Ukraine, but which led to sharp decline in energy costs in Europe. But the main important thing why Sequent was facing some problems was volatility in Turkey operations. So the business in Turkey, where Sequent had significant exposure, was severely impacted by currency depreciation, hyperinflation, and other macroeconomic instability. Also, there was pressure in API segment as well. So the API segment faced margin pressure due to raw material price volatility, and we all know that API segment is going through some pressure, and Sequent also had an impact on that. Also, there was a key product which treat infection which is caused by worms. So that key product, that key API product of Sequent was muted because of lower intake by major consumer, which is WHO, for deworming programs, which was partially linked to school closure in Africa. So because of that volatility in that one product, which was a growth, rather I would say primary revenue contributor for Sequent, also faced problems. So overall, because of all these issues, the financial numbers for Sequent are not looking good. But if I were to talk about the Q2 FY26 number, how it fared well when it comes to quarter-on-quarter and year-on-year. So on year-on-year, if you see, there was a growth of 15% when it comes to revenue, while EBITDA growth was almost 44%. A huge growth when it comes to net profit. So maybe we are seeing good numbers, but we need to watch out. Investors should watch out. Also, few quarters going ahead, will these numbers be sustainable? Of course, we'll be speaking to management. But overall, if also talking about the margin trajectory, if you see, there's been increase in margins also from 7.7% to 13.2%. But we would want to know what's the sustainable margin going forward. So overall, we have given a neutral rating for this because of good Q2 FY26, so a neutral rating when it comes to income statement.
Well, I was just looking at the balance sheet also, Varsha. Not much action happening, and just to give a perspective to our viewers, the ownership hands had exchanged over the last 2 to 3 odd years, but they are actually shoring up the balance sheet. No major announcements of capex has been announced. And look at the reserve. There was a spike, in the H1 numbers coming in. That means company is trying to, shore up more capital so that deployment can start. Borrowings also, they have remained largely stable. Not much change happening, and same thing goes with the cash and bank balances. So when there is no much movement happening in the balance sheet, that means the company is making a strategy, and then the deployment comes at a later stage. So from my side, it's going to be a neutral impact for Sequent Scientific when it comes to the balance sheet.
Talking about the cash flow statement, let's move forward. Overall, if you see cash flow statement, we've given a neutral rating. I mean, not pretty good, but not bad also, because from FY24 to September 25, if you see, they've increased their cash flow from operation from 31 crore to 83 crore in FY25, and of course half yearly, if you see, 45 crore of cash flow from operation. If you see CFO to PAT, also 118%, not that bad, but we might want to see what is the progress going ahead. So overall, that's the reason we have given a neutral rating for cash flow statement.
That's pretty interesting on that front, but there was a lot of loss making also numbers coming in over the last 2 to 3 odd years. That's why the ROC numbers which you are seeing on the screen, FY23 and FY24, this is not available. And right now also the numbers are very dismal. So from my side, the return ratios, the ROC numbers which you are seeing, the return on capital employed, they have not actually picked up, and anything between 10 to 15% up would be a healthy number to track if you are tracking average company looking at the return ratio. So from my side, it's a thumbs down.
No, talking about the shareholding pattern, so pretty good things over here. Of course, the promoter stake has been there at 52%. Of course, I would also want to highlight this key note that there was a time when there was a resignation from, top level executive people. So key executives, including the managing director and CEO and CFO. So there was a resignation at a very critical times, which impacted overall investor confidence and trust. And also one of the reasons why there was a phase when Sequent Scientific was not giving any kind of stock returns to investors just for the benefit of viewers. Talking about the shareholding, well, if you see the interesting part over here is if you see the DIIs, that is domestic, participants. So from 8% to 13%. So this is a good thing, and that's the reason we have given a thumbs up, because the increase in stake by DIIs is a positive thing. So overall, nothing much negative when it comes to shareholding.
That's pretty interesting, Varsha. And street cred also, if you are a shareholder, say for holding the stock for like say 1 year, 1 month, 1 year, even 6 months, there is a good return coming. And seeing how the markets were volatile this year, 41% up move coming in the last 6 odd months. And in the last 5 years, if you're a really long-term investor, this stock has tested your patience. So for a long-term investor, this is a bit very negative. For the 5 years return, just 48%. But for 1 year, 6 month, year-to-date basis, this is a very decent, or I could say outperforming return when it comes to the broader indices. And that's why Sequent Scientific comes in at a neutral rating when it comes to the overall street cred.
Talking about the valuation, so overall if you see FY27 and FY28 valuation forward PE, it is at 48 and 31 times FY28 basis. So I mean, not bad. But so that's the reason we have given a thumbs up, considering the growth expected and also the forward PE that the company has.
Interestingly, beaten down company, the sector is not beaten down, and of course last 2 to 3 odd years the story was different, and now a lot of you could say smaller players and even MNC players are trying to take this animal healthcare market and go ahead. Of course, the pet theme is something which is very important. Outlook, the PAT growth is expected to outpace the EBITDA growth going ahead, and that's a very strong statement coming from the management. They're also pruning down their low margin products, and they're focusing much more on a high volume, I mean to say high value, which is aided by high margin products. That's something to focus on, and focusing will be on new product introductions, especially in the API segment. Now, recently they had launched the oncology segment. It's been roughly 18 odd months and already a 15 to 16 crore portfolio. So good strength coming in from there. A couple of filings is also done, and management is seeing this potential to leverage this same business in the animal health segment as well. So net, it would be, I could say, for this overall outlook, we would be saying this would be a kind of a neutral rating going ahead. But let's just revise most of the ratings which we have done in the KYC, that where does the company actually stand. And last 2 to 3 years has been hard on the company, but not on the industry. Let's just get the ratings and revise this. Income statement, balance sheet, cash flow, all the 3 numbers, the basic things, it's not adding up, isn't it? So we are giving kind of a neutral rating right now. And of course, you see the street trade valuation, that is something very interesting because it's cheaper right now, right? I think the industry rate was around 40 times, it's cheaper on that levels. Net 4.5 out of 8, it's kind of an even Stevens kind of a rating generally we give in our show. But to get in more perspective about the company, about whether this animal theme or is it animal plus human theme, we are going to get all our details up, and right now joining us is Dr. Haribabu Bodepudi, who is the group CEO of Sequent Scientific and Viyash Life. A very good afternoon to you, Mr. Bodepudi. The first question is, of course, the vision. That the vision is, with this is an animal related company. Now there's a human aspect also involved to it. So what will be the product mix, revenue mix? What's the vision like for the next 3 odd years? Company has gone through a lot of ups and downs, but now it's at an inflection point.
Good afternoon, both of you. Thank you so much for giving this opportunity. So you see both Sequent and Viyash last 4 5 quarters continuously growing. Viyash is basically human health fully integrated platform. So last 3 4 years, we developed a lot of products, both API and formulation. Around 40 products API and around 30 products formulation. Formulation is basically for US market. And we see launches are coming up now. That's how where we can see the growth quarter on quarter. So we have very strong portfolio in API. So that's where we are growing. And also last 12, 18 months, we introduced a lot of oncology products on our portfolio. It's catching up and we can see a lot of growth in coming years on API oncology thing. Coming to Sequent, it's again purely animal health fully integrated play. So we have very strong presence API doing business with innovators. Around 75 80% business is coming to innovator. Of course, it was stagnated last couple of years due to various reasons. The main fact is, balance sheet was not very strong last couple of years, but it's continuously strengthening last couple of quarters. But with combined Viyash, balance sheet is going to be very strong for the combined company. That's where we are going to see a lot of opportunity grow in animal health, especially API with Viyash capability, with very strong R&D and very strong manufacturing infrastructure. We have 8 manufacturing sites, both API and intermediates. All are approved by FDA. That's a basic requirement. And also we have very strong R&D focused on new products, complex products. And most important today's scenario, EHS sustainability is a very critical for doing business. So we are very strong. We are at almost equal to any multinational company in that perspective. So with all these things, where we are going to focus next maybe 5 to 8 years, of course, midterm also is equally important. Long-term perspective, I personally see a lot of opportunity in animal health, especially pet care. All of us know pet care is growing very fast in every region. So we want to become definitely one of the leading animal health company in next 5 to 8 years. And of course, API also Sequent, it's a very good growth opportunity. So with our strength, definitely you can see different API Sequent business coming years
Right.
without losing any focus on our base business, human health. It's also is equally important. Slowly, we are moving into specialty business in API. That's where you can see our 60 70% portfolio is oncology. And also formulation, we are trying to take into specialized formulation business, more focused on the US government business, all those things.
Right.
So, yeah.
Yeah. So hi, sir. Varsha, this side. Pleasure to have you at NDTV Profit. Sorry to interrupt you, but you talked about the specialized products also, and I believe that company is moving from lower margin to higher margin products. Just wanted to have an update. Where is the contribution when it comes to higher margin products, or I would call as a value-added products for that matter, and where you want to take this contribution to? If you could give us that number.
No, last 3 years when we started Viyash, initial phase development was 70% is the mature large volume products and 30% is around complex products, because complex product, it takes time to launch. Unless you develop at early stage, it's very difficult to capture market. So that's the reason it takes always complex products 5 to 8 years to launch the products. So initially to manage midterm, we focus more on mature products, 30% complex. But last 12 months, after building the portfolio to mitigate midterm, so our current focus is 60 70% is the more complex products. In that, around 60 70% on the oncology products. That's how you can see the growth last couple of quarters. Growth is coming on 2 3 things. One is, of course, new launches. Second is new products, whatever we do, like CDMO, so a couple of products we are able to generate service income. And all these new products, validation income is coming substantially. So already we see that ratio is moving quarter on quarter. But most of these launches are going to happen maybe from 28, 29, but mostly from 30. And we can see a lot of difference from maybe 29, 30 on this perspective. The
Well,
same way Sequent, since they're not focused much on new products, API last couple of years, now with VI's strength, we are going to cover the products up to 2035. Already last 2 quarters, we were able to develop 4 products, new products.
that's pretty
And
interesting, Dr. Haribabu. But one concern, or we could say the street is wanting, is the guidance coming from the management. And of course, we are seeing inflection point coming in. And you have been very bullish on your high margin products also. And you're giving a very important claim that in the next 5 to 8 years, you would be the pet company, the animal healthcare company going ahead. Dr. Haribabu, this question is for you, the revenue and the margin guidance. If you want to give for FY27 or the next 2 to 3 odd years, what could it be?
so, of course, we are working the strategy since we received NCLT approval just 2 days back. Couple of things till that April we are not supposed to do. That's where we started actively. Of course, integration activities are going on very well. So, guidance perspective, earlier we indicated FY27 we are going to do closely 4,000 crores and EBITDA margins around 20%. Today, Sequent EBITDA margins are not so good, but it's growing quarter on quarter. So we thought 20% is good for 27, but looking at last few quarters, I think 20% we are going to do very soon. So last quarter we did 20 plus, but we are very confident to do 20% margins from now onwards. And FY28 onwards, we are working on the strategy. So we are also thinking to have an investor meeting sometime in uh, last quarter or first quarter of next year to have a complete strategy discussion. And we'll definitely are going to give the guidance to the market that time. But till that time, of course, this is what we indicated to market. FY27 close to 4,000 crores with 20% EBITDA margin. We are very confident on
Right.
that.
Also, sir, in Q1 FY26 con call, you had said that the PAT growth will outpace EBITDA growth. Are you on track on that? If you could, quantify us for that.
Absolutely. It's today, last few quarters, you see EBITDA growth or margin growth, but now it's converting into free cash. Last year, Viyash itself, we were able to generate 200 crores free cash. So that's continuously going to grow. And it's more important converting into EBITDA into PAT. It started now, there are two things where we are suffering PAT. One is Sequent perspective. Interest component is very high. That's a one area. And of course, a few things, ESOP component also is there. But most important, interest component is very high in Sequent. With the combined entity balance sheet, with our current net debt with EBITDA ratio close to 0.7, and we are going to generate a lot of free cash. So our interest burden is going to come down drastically in next few quarters. That's where we can convert our EBITDA into PAT. And the second area in Viyash, we have some amortization intangibles.
Interesting,
That also
Dr.
we are suffering every
Yes.
quarter. I think these two things are
Dr.
going to come.
Haribabu, last
Okay.
question. Of course, the debt-related, the numbers coming.
Yeah.
Viyash Lifesciences, technically a debt-free company. What's the outlook looking like on the debt picture on the overall entity? You have spoken about the EBITDA synergies, the revenue synergies, and even the margins on a blended basis. But overall, what does this look like for Viyash? The debt plus the picture coming in for the consolidated entity.
So, as you know, Viyash is currently debt-free. Last quarter, we have very little debt, 20 crores or net debt. So now almost debt-free. With the combined entity, current debt EBITDA ratio is zero point 0.7. I think it's close to, we have 400 crores. Next few quarters is going to come drastically. But we have a few things. And also, we don't see much capex infusion in next couple of quarters. Already we infused last quarter 50 odd crores to expand Sequent products. We don't see much capex infusion in next few quarters. And also we see a lot of free cash generation in next few quarters. There are two things. So we are working on that, whether to become debt free soon. But also we have a couple of plans and M&A to bridge the gap subsequent. When I say we want to become a leading animal health company, so there are few gaps in the business. We are trying to bridge those gaps, trying to acquire a few front-end areas in few countries where we can actually move quickly on that, trying to build some additional infrastructure. But this year end, I can say next 2 quarters, it's going to come drastically on the debt. That's where we are going to improve PAT.
Thank you so much, Mr. Haribabu, for answering all the questions, and all the best for the business.
Thank you. Thank you so much for the opportunity. Thank you.
Thank you so much. Well,
Thank
the
you.
key takeaways from this conversation would be that they are moving slowly into specialized products for API and formulation. Balance sheet will be strong for combined entity, and they want to become a leading animal healthcare company in the next 5 to 8 years. And PAT growth will outpace EBITDA growth, and EBITDA margin is expected at around 20%.
So they are, sticking by their FY27 guidance coming in. But one question we asked on debt, it's not the debt reduction story. There is a further story of merger and acquisition coming in, because there are some more holes to be plugged in the entire ecosystem, and animal and healthcare. It's a vast system, right? It's not just complete. But that's all for today in KYC. We got Sequent Scientific's management for you. So stay tuned to NDTV Profit.